What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, I want to recap a little bit of today's price action on the NASDAQ futures. I took 5 trades today, totaled $820 on the Top Step account today, and I kind of want to show you guys some of the scalps that I was looking for and or taking. So today, by no stretch of the means, was a amazing day. We had a period of time where the market was very, very choppy. I was kind of going over some of the price action in Evolution Traders room. Again, I wanted to kind of stay away from the short positions just due to the fact that the trend was higher. And if you're a little bit newer or you're less experienced with price action and just trading futures in general and just technical analysis, it was very hard to see that the trend was higher. But if you kind of look at what we were doing in the pre-market, where we're trading sideways, we get that 5:30 a.m. pop here, from between 5 and 5:30 a.m. Pacific Standard Time. We get a little bit of a pop followed by some consolidation, and then leading into the market open, right? If you notice the market open here, I'm going to pull out my drawing tool just very, very quickly. This opening candle here immediately started to sink. Now, I'm never one to really trade that first 5-minute opening bar. I like that 5-minute bar to close, and then I like to see where we at in the chart, where we at in correlation with the pre-market levels. And if you notice, we kind of drop down below to these pre-market lows, okay? And then once that happens, and once we start to spike up here, I'm noticing the pre-market highs, okay? So I'm noticing those pre-market highs, and if that gets broken, I'm, not opposed to getting in on that particular scalp play. Now, today I was trading heavier size, full transparency between 3 and 4 mini contracts, okay? Definitely not recommended if you are a newer trader or you're really trying to hang on to that one evaluation account or one funded account. Just due to the fact that if you are wrong and you are trading that much size, you are running the risk of being stopped out. You're running the risk of blowing an account. But when you have a business model that's going to allow you to, play a little bit more aggressive, but take less points per trade, it can work out in your favor if you can catch a few winning trades. Now, the hard part about trading this way and trading a system like this is being able to have the self-control and discipline to stop out on the day when you're green. So what I like to do is if I'm able to catch a couple of winners off the open or, within the first couple of hours and build up that P&L cushion, I like to then size down a little bit. So instead of trading 3 mini contracts, I'll trade 2. Instead of trading 2, I'll trade 1. Instead of trading 1, I'll trade 5 micros, so forth and so forth. So this was a nice little opening trade here that I was able to take. Now, what I'm noticing here is if we haven't taken out the floor, okay, we're still kind of trading on an uptrend here on this 20-period moving average. We've got this rising kind of, support down here at the 200-day moving average, right? So if I'm just looking at the 200-day moving average, this to me is an uptrend, okay? It's riding this short-term 20 and 5-day moving average to the upside. Again, kind of hard to see if you're a little bit newer to the markets because we get periods of time like this, right? We get a period of time like this where the market essentially is going a little bit up, then it's coming back down. It's going a little bit up back to the same place, coming back down, going a little bit up, coming right back down. So again, take your time. Again, level of experience is definitely going to come with time. Now, what I first started to notice is once we put in this first opening range here, we put in these highs. We pulled back and consolidated and we tested those highs. This becomes a double top. Once we pulled back here back to this previous swing low, we did sweep it. And I was, if you notice, below 18,066. I had this price level line kind of marked out right here. If we were to able to put in this low, bounce, and lose the low, I was interested in going short into the 200-day moving average. That never happened. So once that never happened, I started to identify that the trend is going upwards, okay? And when that trend was going upwards here, I was just waiting to take these scalps. 20 SMA play here, confirmation, get in, take into, right, into the previous double top. And when that happens, I'm quickly getting in, getting out on 1, 2 mini contracts. In this particular situation, I moved from a few mini contracts to a couple mini contracts. So I traded 2 mini contracts here and just took a couple of points on the way up. Now, what I was looking for after this, once we started to, you know, kind of test this area, put in this triple top here, I noticed a big area of resistance. I've got that level kind of marked out there. What I wanted to see is that level get broken. Okay, once it gets broken, that new price point becomes my entry. Okay, so I'm looking for that price to get broken. I'm looking for a pullback, a consolidation, something else, and then I'm looking for a following candle to kind of confirm that new high, and then I want to get in. So once I get in on this particular trade here, I'm going to use the previous, again, let me show you the entry. I'm getting in on this candle, and I'm going to use the previous 5-minute low as my stop. You can see that that's also correlating with the 20 SMA there. Again, on this particular trade here, I'm going to be trading a lot less size. So down to 5 micros here. That way I can withstand a little bit of ups and downs. And I just sit in this trade, guys. I'm just going to sit in this trade here. It can pull back. It can do whatever. It can put in these new highs. I'm really looking for something as long as we're staying over this 20 SMA. Now here, got a little bit nervous once we broke down below that 20 SMA. And here, once we closed below the 20 SMA, but we got no follow through. Okay. So once you get no follow through, when you close below the 20 period moving average and you're still on an uptrend, you have to trust the charts and allow this to move. Now, once we started to put in a fresh 20 SMA play here and take out the highs, I immediately sold here. Now, wish I would have got out at the top here, but I decided to make this video. And as I was making this video, I'm looking at the screen and noticed this big green candle. So again, you're never going to catch the full move. I'm never looking to catch the full move. All I'm realizing is that once we broke that triple top, we put in a high and pulled back. If we confirm that new high, I'm going to sell at the next new high. It's very, very simple. Again, depending on the number of contracts that you're trading is going to be dependent on how much profit you're looking to take. If you're someone who's trading mini contracts, I believe, you know, taking scalps of 5-6 points is plenty, right? Give yourself enough room on those stop losses to allow the NASDAQ to be able to work for you. What you're banking on is that you're going to have a higher win rate than you are a losing win rate. Now, again, with this type of aggressive strategy where you're playing multiple mini contracts, you're definitely going to take some hits. You're definitely going to lose some accounts. So make sure you understand that. Make sure you can understand that there's going to be times in the trading days where you're going to have to stop yourself out. But all, you know, risk management levels aside, if we're just looking at what was going on today's price action, we had one clear setup here over the pre-market highs. We had a lot of choppiness action here. We had a double bottom that was being put in pretty early in the day before lunchtime. So once you start to notice that we're not taking out the 200, we're not taking out pre-market lows, you have to just sit there and go with the trend, right? Ignore the short setups, right? Even though you can make a little bit of money, ignore the short setups, ignore the short setups, ignore the short setups, and just continue to look for those longs. Continue to look for those longs. Why you want to continue to look for those longs is because you want to stay with the flow of the market. The flow of the market is moving higher, okay? Today, at least. Moving higher. So again, stay with the flow of the market. Don't try to be a hero and short here. Don't look for this early short here. Don't get caught up trying to short there, trying to short here, trying to short here. Don't get caught up, because realistically all you're doing is shorting in the middle of a range that's pretty much consolidating for the next push higher, right? So the longer we go sideways, the bigger the potential move to the upside. The longer we go sideways, the bigger the potential move to the downside. I hope this video helps you guys out there. Again, I'll see you guys all on the inside. Make sure to like, comment, subscribe, and I'll catch you guys all in the next video.